It was a quieter week in terms of specific news events, as the stock market picked up steam as markets price in Federal Reserve interest rate cuts with a lesser chance of systematic risk than first feared. Have they got this right? The world's largest asset manager, BlackRock, thinks not. Either way, this week promises to be packed with action as Q1 has come to an end. Hello, my name is Connor Woods, market analyst at ForexSignals and howtotrade.com. Here is our weekly preview for the 3rd to the 7th of April, 2023. So it's that time when our eyes are set on a very important US Non-Farm Payrolls report, which is due on Friday in what I think is the likely event of the week. Will the US labour market continue to remain robust? This is not all though, with the Reserve Bank of Australia and the Reserve Bank of New Zealand setting their monetary policy decision up next as well. With it being US Non-Farm Payrolls week, that means traders will get, their usual warm-up before Friday in the form of JOLTS job openings and also ADP non-farm employment change. It goes without saying, do not get too comfortable with the lower volatility theme of week number 12 as things are about to change. Let's dive in to this week's top opportunities day by day. So we kick off a much more fundamentally active week in the markets with Switzerland inflation data on Monday. As many economies across the globe are sort of fighting that sticky inflation, the rise in prices that we've seen in Switzerland has been far less dramatic. However, there are signs that inflation is ticking higher with 2 consecutive months of higher than forecasted readings, hence the Swiss franc strength that we've seen recently, and you can see that on the chart now. With the US ISM manufacturing PMI coming later in the day, I think the most active pair on Monday is going to be this USD Swissy Forex pair that we've got in front of us. Are we oversold now? Well, you can see that we've got that bearish trend still intact, but you can just see this was the first sign, and it was only the first sign of a momentum shift to the top side. There's our retest, but now we're languishing back down near the lows. Now for me, if I'm going to be confident of this move, then I really want to mark this as a sell side liquidity point. That's the 1st of Feb low. And I think what may happen is we could see continued dollar weakness into next week, potentially taking out this low before getting that snap higher, and we can target maybe the 100-day moving average, or we can even target these equal highs up here, which are still yet to be taken out. And I can mark that cleanly now as well, these equal highs as our target. So that's the situation I'm seeing in USD Swissy, a grab of this liquidity and then a move up towards and take out those equal highs and towards that 200-day moving average. Tuesday's Asia session is set to be a busy one as well, with the Reserve Bank of Australia set to release its next monetary policy decision, followed by a speech by the Governor Philip Lowe. Analysts are expecting the peak rate in Australia to be at around the 3.85% level, and with the current rate of 3.6%, I think it's more likely that we're going to see another pause from the Reserve Bank of Australia. And also on Tuesday, we've got the JOLTS job openings, which have been above forecast now for 4 consecutive months. And if this theme continues, there could be some weakness in this AED USD pair. Now I'm going to keep it really, really simple. You can see this breakdown below this 200-day moving average. From a risk reward perspective, we're getting this pause that we've got here running into some supply zones, but you just notice how we're just failing really to gather any momentum above this 200-day moving average. So for me, I'm going to use that as resistance maybe for this week. These moving averages look to me like they're going to start to cross over as well and move down. And in terms of risk reward perspective, there's clean targets in mind here for Euro USD. We've got this demand zone at 6,500, and then we've also got another one down here at 634.50. So I'm waiting for the first real sign of evidence, maybe if that comes on a 4-hour chart or a 1-hour chart, that we start to get this breakdown. And I think that may come as soon as we get a break below that 65900 level. So that's the targets that I've got in mind. And again on Wednesday, the Asia session looks to be the place to be when the Reserve Bank of New Zealand decides on its next monetary policy decision as well. Will they decide to pause like their neighbours, given rates are already at a whopping 4.75%? There's also more employment data out in the US in the form of ADP, non-farm employment change. So I want to have a look at where NZD yen is trading at the moment, because we've got some interesting moves here. If we look at this daily swing low that we've got, we can just see how that was taken out at the beginning of the week, or the end of the previous week. That sell side liquidity was taken, and then it's been a clean run to the top side. But I've got a feeling we might run into some resistance here, because what I notice on the daily time frame is we've got imbalance here, and that imbalance just sits where that 200-day moving average is here. So maybe what we might see is a continuation and then the reversal if the Reserve Bank of New Zealand decide to pause, and then we get that move down and that breakdown, and we're really just sort of playing the range here. We get a break above, then I think we unlock some of this imbalance. We see 86.5. Thursday will be that typical midweek calm before the NFP storm, with the event of the day likely to be the Canada employment report. There's also some natural gas storage information out, and we can safely call this the calm before the NFP storm. And with a clear correlation between the Canadian dollar and crude oil, I think Thursday might be a great day to turn our attention to that commodity space. And you can really see the breakdown in crude oil from that daily range we were in. That sort of gave us an idea about where crude oil wants to go. Now, there's a couple of levels that I've got marked for crude oil. If I just get my markings back on. First of all, this sell side liquidity was taken. So this has generated this counter trend move that we see to the top side. Now, there's a couple of levels in mind here. We can either look for this as liquidity and then into this potential daily imbalance area. Or I think, mate, what would be a better zone to look at will be this supply zone, which is really where that breakdown actually occurred from. So I'm looking for around 75 to 76.8 to be, along with, of course, we've got the 150-day moving average coming into play there to act as resistance this week to bring oil back down towards that Biden bid at around 70 level. And then it's the first Friday of the month, so you know what that means. It's the US Non-Farm Payrolls Day, arguably the most anticipated event of the month. Last time out, the employment change figure was, I think, quite robust at 311,000. However, the unemployment rate stole the show as it ticked up 0.2%. With it being Good Friday, there's also bank holidays in Europe and the UK. However, this is potentially dangerous as the markets are then likely to be thin and move unpredictably, and this may also mean extra volatility in US markets come the release of the jobs report. Therefore, I think it would be foolish not to look at gold, which I think might react sharply on Friday. This is what I see on gold at the moment. This is on an hourly chart perspective. Potentially got this symmetrical triangle formation coming in. Now, I see that trend line coming in above as liquidity, and then also when we zoom in here, I can see liquidity at this low, but I can see a break of structure. So for me, this demand zone at 1953, which would be a wick, but into both of these liquidity areas, and then move higher, because obviously I am still bullish on this. Hopefully we can see something like that, with targets in mind being, for me, up at around this 2000 level or 2003 for gold. So as you can probably tell, there is plenty to contend with this week, with action across the board after what was a calmer week. Central bank action, inflation report in Switzerland, Canada employment data, and of course, the huge release of the US non-farm payrolls on a day of thin markets. This will undoubtedly be a monumental week in the markets. And as always, our team of analysts will help guide you through these opportunities every single day in the trading room, ensuring a high quality service as we cover all of the events for you in our live streams. We'll help you make the most informed trading decisions and of course, be with you every single step of the way. Until then, trade well and we'll see you on our next live stream.